Hello everyone, welcome back. So in this episode, I would be demonstrating another powerful intraday technique, which is primarily using two indicators. One is pivot points, and second is RSI divergence. So this technique has to be applied on a 15-minute time frame. So the way it works is, before I get into the technique itself, these are the two standard indicators which are available in many broker terminals. For this illustration, I have chosen Zerodha as a Zerodha as a readily available RSI divergence indicator. So the technique is very simple. Generally, when we look at RSI divergence is always correlated with the price movements, right? So it shows the underlying strength of an uptrend or a downtrend, and then you can actually look at RSI divergence with the price correlation and make out if the trend is fizzling out or not. So in this technique, what we look at is RSI divergence and happening at certain key points, which is nothing but the pivot points. So again, I wouldn't get into the details of the calculation of pivot points, but pivot points play an important role for intraday trading. So before any further delays, we will get into the technique on how to enter into the trade. So in this example, I'm illustrating a short trade, which can also be very well applied on any long trades. So first thing, as I mentioned, you need to have the chart on a 15-minute time frame. In terms of studies, we will first apply the pivot. So we look for pivot points, and there will be a minor change that I'll be doing on the pivot points, which is to change the colors of resistance and support. So as you can see that pivot has a central line. We will let it in black color, and then you have the resistance 1, resistance 2, and resistance 3. So now all the resistances I would make it in a single and unique color, which is red, and all the support lines I would make it in a dark green color so that it is more uh, visible and easy to spot. So once we apply this, you get something like this, right? I mean, as you can see, you have the central line, which is the black line, and then you have the resistance lines. Likewise, you have below the central line, you have the three support lines. Okay, so now this is the first indicator you have to apply. The second indicator that you have to apply is look for RSI divergence. So now, as you see here, this is RSI divergence indicator. It is nothing but RSI indicator with some indication about the divergence aspect, right? So now the ground rules for this technique is, first of all, the time frame has to be 15 minutes. Secondly, when you look at the RSI divergence, right? RSI divergence. This I call as the first leg of RSI divergence. This has to be above overbought region. So in for this technique, we would be using 20 and 80 as oversold and overbought regions. So the first leg definitely has to be above 80, and the second leg, as you can see, the second leg is where you can see a divergence with respect to the price movements. So now the second leg has to be below 80. So this is the first condition. The second condition is where the divergence is happening, the stock should have made a high near the resistance. It can be resistance 1, resistance 2, or resistance 3, and there is a wick formation at the resistance. So now these are the two primary entry criterias. You have to wait for this candle to close. Post that, you will take an entry on the next candle open. So as you can see here, the next candle opened at 927, right? So your entry for the short trade would be at 927, and your stop loss would be few ticks above the previous high, which is around 930. So I'll keep the stop loss at maybe 932 for this trade. So as you can see that post this, Century started going down, and then it eventually made a low of 907, right? 908. So if you look at it, it's almost 2% in an intraday trade. So generally for this kind of trades, you look for 1:2 risk to reward ratio, right? I mean, here the risk was very minimal. It was only 3 points. But generally, if you look at it, maybe half a percent of risk and 1% of returns is what you can expect. Of course, you can ride this downtrend. Let's say if you are following some trailing stop loss using some EMAs, that is quite possible. But typically, you can look for 1:2 risk reward ratio, and in this particular trade. Okay, so I mean, as you can see here, the RSI divergence is very clear. For example, the RSI peaked here, right? And if I look at the price correlation here in this chart, let me just pick this. So now this is where the RSI peaked, and this is where the stock price peaked, right? So you see a clear, uh, inclined line here, while on the RSI side you have a decrease in the overall RSI. So this is nothing but RSI divergence, wherein your RSI, is making a low compared to the previous high it made. At the same time, you see that the stock has actually moved up, in an upward direction. It has made a peak. So now the same method can be applied for long trades as well, wherein you look for oversold regions, which is below 20, and the first leg of RSI should be below 20, and then you look for a divergence in price. So now this divergence should be happening near the support levels, which is support 1, support 2, support 3, right? So this is a very, very good technique that can be used very effectively on intraday trades. As you know that there's no technique which is 100% accurate. Even if people claim they have found some holy grail, there is no such thing which exists. But with this particular trading technique, you can enhance and increase your probability of winning and risk reward ratio. So hope you enjoyed this video, and thanks for your time. If you like the video, please do not forget to click on the like button. And if you're not a subscriber yet, please do subscribe, because I will be posting more such videos which can actually help you, in intraday trading. Good luck, and see you next time.